Yeah, you just take the FNO expiry part out,
Yeah.
which is going to be a little bit of pull here, a little bit of push there.
Yeah.
But barring that, the market in last couple of days pretty much have followed a script, which is that you had a big rise, you're consolidating. On bad days, you're going to the lower end of the range. On good days, you're bouncing back from the lower end of the range. There is no decisive breakout in the market. FI buying is a huge cushion, and we're looking at 19 out of 20 sessions. Now that's a remarkable kind of a commitment which is coming from foreign institutional investors. They were supposed to sell in the month of May and go away. Guess what? They've sold in China and they've come to India. So they've been selling in the month of May in China and they've been coming back to India. So that's how the structure of the market is. So the confidence to participate, I think, is high. The desire to buy into small and mid cap stocks, I think it continues. It makes perfect sense to roll over your long positions if you bought with the stop loss in mind. And in the near term, I guess it really makes very little sense to go against the market. And I think that is very crucial here for us to point out, Aisha. The temptation always is to go against the market. But I don't think we've reached there that you should go against the market, which is sell or go short. You should short when the trend is reversing. The trend has not reversed. And you should sell when the markets have become obese, which they have not become. So you simply have to do what could be called as a very boring strategy, hold. There's nothing wrong in holding. There's nothing wrong in holding. And sometimes by just doing nothing also, even if you're trading and if you do nothing, you can make big gains. If you bought banks at lower levels, if you bought, let's say, capital goods stocks at lower levels, few auto stocks at lower levels, this is a great market where you may not make money on a daily basis, but on a monthly basis, the gains are going to be much more rewarding. So, like they used to tell us in our school, finger on your lips. I think it's that market.
Yeah, just sit on the sidelines, don't try to fight the trend.
Exactly. Yeah. Let the trend reverse, we'll talk about it. But today the trend is favorable.
Okay, so sit pretty right now, sit tight perhaps and do nothing. Don't go against the trend. And the interesting stats as well will come up for you on your screen as to how we've seen the index perform in the months of May and June over the past 3 years or so. So that trend as well will come up for you. But let's get a move on then and focus in on the entire metals basket, because that was surely in the spotlight. The prices on LME have fallen for the third consecutive day, and that is largely on the back of the Chinese demand faltering and the weakening in construction activity. So that clearly will have negative implications with respect to the rising interest rates, the stronger dollar as well. So Nikunj, to a certain extent, metals losing sheen?
See, you can divide the metal into two parts, ferrous and non-ferrous. While the non-ferrous part is certainly losing some sheen, you could talk about the China effect here, or the fact that the dollar index is making a comeback. It is now marching towards 104. But yes, metal stocks, because of global slowdown concerns, what's happening in China in terms of demand reopening slightly weak, or the demand assumptions given the way how US economy is moving, I think all of them are having impact on the metal prices per se. The copper, which is also referred to as Dr. Copper, is the lead indicator of which way the industrial demand is moving. So industrial demand surely slowing down, and that is having an impact on metal stocks. But in India, you don't have too many non-ferrous stocks. Largely, you've got ferrous stocks. So if you have to pick and choose, I would say go for ferrous, not for non-ferrous. Within non-ferrous, if you look at Vedanta for me, it's a special situation stock. They're giving a lot of dividend. We know the promoters are trying to realign their capital allocation. So that is like a judgment call, but I'm not too excited about Vedanta purely because of the capital allocation policy. Hindalco, well, novelist numbers, Hindalco numbers were not that bad, so it becomes a buy on decline. But within the steel space, I guess specialist steel companies and steel converters, I think, have potential to outperform. So look at steel companies which have a very large inward focus rather than external focus. Because in India, the steel prices are decent. In India, the iron ore prices have come down. So steel companies, after a painful 2023, FY23, I think are positioned for better numbers. I think the trick now is buy companies which have high exposure to coal. Coke prices have come down 30 to 40%. So steel companies, they get a lot of, what is the raw material for steel? Coal and iron ore. Iron ore prices have started coming down. Coal prices have already collapsed. So go for steel rather than non-ferrous.
Yeah, absolutely. Okay, in case you're wondering why the global cues are muted, the FOMC minutes were, released, and clearly you've seen the Dow share out about almost 250 points, which has now put US on the negative ratings watch as well. The key takeaways, of course, from the FOMC minutes were that officials saw a timely debt limit increase as essential. Not just that, they've also talked about as to how they're going to be data dependent, and that's their approach. They're saying the cuts are unlikely right now. The Fed may be in for a pause. That really has been the deduction. And they maintain the forecast for mild recession in 2023. So till the time it's mild, I guess the markets can still deal with it.
You know, over the years I've tracked financial markets, and all of us have tracked financial markets. I guess this is the most awaited recession in US. Yeah, I mean, just that from last 1.5 years we've been talking about recession is coming.
Yeah.
Oh, it has not come, it will come soon. Oh, it has not come, don't worry, it will come. So every narrative in the last 1.5 years is only centered around high inflation and US economy moving into recession. And you know, markets are smart. I mean, they can price in what is coming next. You always have to focus on not where the puck has moved, but where the puck would move. So the preparedness of financial markets and the preparedness of central bankers, I guess right now is so supreme that I think the recession, even if it comes, unless it's like a really hard landing, which we don't know today, I think it's just going to come and go. That's my sense.